Hi, thanks for joining me on my market report. We do this on a daily basis. We go over the mortgage rates and what's impacting them on a daily basis. We don't go into rate quotes on this program. We just kind of go into what's impacting them, if they're going upwards, downwards, unchanged levels. If you guys are looking for a rate quote, please feel free to reach out. A little bit about my background is I am a loan officer. I do work with the national lender. We can certainly help you with rate quotes. If you guys are looking to refinance or purchase, we can help you with the financing and pre-approvals for those scenarios as well. Or if you just got simple questions, you're seeking answers on regards to maybe loan programs or what's out there or the process or these type of things. Again, please feel free to reach out. We're here to act as a source for you folks. Uh, in the meantime, why don't we jump right into it? We'll start off with the economic report scheduled for today. We have only one item here, and that's the consumer sentiment for the month of June. The previous report came out in May at 82.9. Forecast is on 84 and exceed that, 86.4. So consumers are feeling a little bit better in June, probably because we got summer, right? But anyway, without jokes aside, they are feeling a little bit better, but they do still have the survey basically does indicate that they are still have some concerns over inflation. They are seeing gas prices higher. Obviously, if they're out looking for homes, they're seeing home prices jumping up. They're going to grocery stores, seeing their grocery bills going up there. But they are kind of seeing what the Fed is saying in regards to they do believe it will be temporary, that things will come back down. So let's jump ahead. We also have a rollover date, so I'll touch on that in a bit when we get into the mortgage-backed securities. Uh, but we'll explain what that is coming up ahead. But first, we'll start with headline news. Stocks are mixed today. We got the S&P and Dow are in negative territory. Nasdaq has been kind of dipping its toe back and forth in positive and negative territory. As I've just looked, it was just slightly in positive territory, and we'll touch on why that is occurring. But there's really no catalyst today in terms of economic data or even news for investors to look at. So right now they're going to be looking into next week's FOMC meeting, the Fed meeting, the two-day meeting. They'll start Tuesday, and then they'll get their announcement on Wednesday. They want to kind of see if the Fed will start talking about tapering, if there's any inside scoop as to when they might start talking about and when they expect to actually start doing the tapering. And what tapering is basically those. Right now, the Fed has been buying about $180 billion worth of treasuries and mortgage-backed securities every month, and that is help propping up mortgage rates and treasuries prices. So when they stop buying that, obviously those will go up because you have the supply and demand. You have less demand for it, and as a result, those prices, mortgage rates will start creeping up even further. So when they start doing that. So anyways, that's what they're kind of looking towards for next week. Now, yesterday we did get the inflation data, consumer inflation data from the CPI. It did jump up. The headline shows from 4.2 to 5%. The core is kind of what we look more, but that was at 3.8%. So that's something we will also keep an eye on. Typically, we had a good day yesterday. Typically on high inflation data, we usually have a very bad day, especially when we look at May's numbers. But the markets are kind of indicating, are kind of listening to the Fed. They are kind of, for now, they're kind of looking at, okay, maybe the Fed is right. This was transitory. This will be temporary. This will improve. So right now, they're kind of shrugging that off a little bit for right now. Again, the key word is right now because we don't, you know, the Fed is speculating that this will be, or they believe that this will be transitory. But again, we don't know how long the duration is going to be as to when it will actually start coming back down. We need to get through the supply chain. We need to get that bottleneck, back to normal levels. We're hoping that again, those will come down much more rapidly. The prices, however, it could be slower. There's a camp out there that think it's going to be a lot slower reducing those prices as we go moving forward versus like a quick downturn in those prices as well. So in any case, that's what's going to determine later on as to the Fed's tapering and such. Let's jump ahead, see what's going on with mortgage rates. Mortgage rates are down 20 basis points. It was kind of hanging between 11 and 14 for a bit, and then all of a sudden, boom, it just jumped down to, or slipped even further down to 20 basis points as I was about ready to make this screenshot for you guys. So, but what I was saying about earlier, the roll date, we are actually probably closer up to this level. What happens is that we begin July's monthly coupons. So right around this time frame, we basically do a reset on pricing. It doesn't affect rates or pricing, but when you look at the charts, it looks worse than it is. But it's the same pricing. They do a reset. So now we're working on loans now, funding now, moving towards, loans funded now on towards about middle of July. Those will be July's data, our loans, and then after that you'll get another rollover date, and that will go into August. This is why we have like these 30-day locks and stuff. In any case, for the day we are down about 20 basis points. We did close up about 22 basis points, which kind of led to even a second reprice for the better because most lenders came out with pricing down here for the worst, and then about the time when I did the report yesterday, we're about right here. We were about even with the same level as the day before, so our pricing came in and we got better pricing. So right now we should be probably closer to this level right now, and this means that we're back to basically Wednesday's level of pricing, and we're getting a little bit worse pricing right now as a result. So we broke below the 25, and we're testing the 50-day moving average right now. Yields, however, have dropped. You saw yesterday we dropped all the way down to about 1.44 level. Right now we're just hanging in there, just under 1.46. Right now, and kind of between these two technical levels here. It looks like it tested this earlier, has pulled back. If this proves to be strong, this could help us out to keep these at a more moderate level and help pricing for mortgage rates going into July. All right, folks. I hope that helps. Again, July could be a good month for rates for those who are looking to refinance or buy. So again, keep your eyes open, and if there's anything I can help you guys out with, please reach out. Meanwhile, you guys enjoy your weekend, enjoy your day, and we'll look forward to see you guys on Friday's video. Also, if you guys like the videos, please smash that like button. I greatly appreciate it. It does help out the channel. So again, we appreciate your watching and your views. Have a great day. Bye bye.